cooked some chili, man. I'm trying to eat.
Pardon?
I said, my brother's wife cooked some chili. I'm trying to eat. All right.
Yeah, it's like 11:30 here. I need to go to bed.
Oh, yeah. It ain't 11:30 here. It's dinner time. It's 4:36.
Just get Sean to bring you some chili, innit?
Man, Sean is at work.
Oh, you need to qualify that account quick.
Let me see.
Right. So the weekly.
Right.
So the weekly you start on the weekend and mark up your look for.
We already did. We've already done
we need to get this from the top, like because
Jesus. If you silence. All right, we've done. This is where we started this week. When we started this week, this was like this. It was a bearish order block. That it traveled. This candle right here traveled 800 pips last week. We anticipated that we were going to get a retracement to this zone. Remember, we threw the fib on this candle, and this was the golden zone. So we anticipated that we'd get a move to the golden zone before price would either taper off and sell, or it would just blow through the golden zone and buy. That's to be determined. But we do understand that price on the retracement should pay us 375 pips. That's why this trade was such a great trade setup. Okay. What I told everybody was drop down to the 4-hour chart, right? Last week ended on a bullish order block. Now, we can't act on this bullish order block because this is last week's news, right? But what I told everybody Saturday was, I do not believe that we're going to get another bullish order block, right? So what you're going to have to do as a trader is you're going to have to wait for a break in structure. Either price is going to pull back, break this structure, pull back and let you in the trade, or it's going to go up, pull back, let you in the trade, and continue to push. However you decide, that's okay. You have to have your own entry criteria as a trader. And whatever that criteria is, it should be written down, and that should be commonplace to you as a trader. If that means that you're on the 4-hour and you drop down to the 15-minute and wait for a bullish order block, so be it. So let's play this trade out a little bit. This was my exact setup. I had price. I wanted to see it come back and tap into this order block, and I wanted it to go higher, right? But in the case that it didn't come back and tap in, I would still be able to get in the trade based off of a 15-minute order block. So when the market opened up, we have 1 hour of market movement, right? That we don't trade. This is the candle that we got. We got that big green candle. Like, oh, God, no. I can't get in. I have to wait for this to pull back. So the second hour of trading, we got the pullback. The third hour, it pulled back, and this is where I got in. I got in on that pullback on the third hour, right? I entered the trade here. I entered 2 positions. 9,200, 2 positions, right? Now the trade started pushing in our direction. I'm going to go back to the 4-hour chart. So what I anticipated was a rally base rally, right?
Sorry, so you entered on the 15-minute.
I entered on the 1 hour when it pulled back, right? You saw that second hour when it pulled all the way back?
Yeah, so you didn't drop down to the 15-minute.
I did not drop down because it was close enough to my entry that I knew I had to take the trade, right? It had retraced 78% of this candle, pretty much. If you look at this candle here.
Did you fib the candle when you did that at the time? Or did you just...
I had it marked up whenever this thing pulled back. So whenever this started pulling back, I fibbed this candle, and this was the 78%. See where it is?
Yeah. Yes, that's a Sunday open candle. You fibbed that.
Yeah.
Yeah. Okay. So I think in GA it had a gap as well. The Sunday opens. I don't know if that.
So I think probably all the G pairs did. Now, I don't know. That's not a normal thing that I do. But price doesn't normally shoot out like that. I just fibbed it because of the way it shot out and then it started pulling back. Once it started pulling back, I needed to get an idea of where I could enter. I had the golden zone marked up, but the entry that I really wanted was a 78.6. And when the hour candle pushed down, I didn't need to drop down any time frame. It was at the area. I was cool with that entry. Now, when I entered these two positions, my hedge was at the top of this order block, right? So it was about 35 pips, right? 35 pips was my hedge. It never got activated. As soon as it entered, straight in the profit. So,
sorry, can you just put in a sell position so I understand that your hedge, like a short position?
Oh, sweet Jesus. You already know this stuff, Leandra.
It's for the people in the back. This is
well, no, everybody doesn't trade like this. Okay, this was my sell position right here. This was my buy position right here.
And your stop loss was all the way up there.
There's no stop loss. No stop loss. My buy position was here. My sell position was here. No stop loss. It was either going to push down and trigger my sell position, or it was going to push up like it did. So this trade pushed up. Then it pushed up again. So I made my 10%, I think, in 170 pips or so, right? And I took my profit, at that level. But anyway, we're here right now. So this is all that we need to know. That this is a bullish order block that has not been violated. You see that? Now, yeah. This is a pushback and a tap in really to the order block. If you're doing the order block at the wicks, this pushed into your order block. What I would anticipate is for this candle to rally again, right? You got rally, base, rally, base. I would expect for this to rally. But just because I expect it doesn't mean that that's exactly what's going to happen. It could pull back further and then rally. So if you do not get this rally and this doesn't turn into another bullish order block, you cannot just jump in the trade. I would not suggest just jumping in the trade for a buy, because that means it's going to push further down, right? Are you tracking that?
Yeah, I'm following. Right.
So if it pushes further down, I would look for a retest of these moving averages, which should still not violate this order block. And at some point, you're going to get a great entry. So if you just throw the fib on here right now, your 78.6 is right here. So you can mark your 78.6 up. If it pushes down here, I wouldn't even question this entry. 193.37.9. I would definitely hop in here for a buy. My stop loss or my hedge trade would go down here at 193.70. So it's probably about a 60 pip difference. If you want to do the moving average, it'll give you a 40 pip difference. It'll be about a 40 pip stop loss to the moving average. Either one is fine, right? The thing is, a hedge trade allows me to stay in a trade if it comes down here. A stop loss will guarantee that you lose your trade. So if I'm using a stop loss, I'm using a 60 pip stop loss. But the hedge trade, I can use 40 pips, and I would sleep like a baby with 40 pips. You know what I'm saying? Because I don't believe it's going to come down here, for one. But for two, if it picks my hedge up, all I got to do is start chopping it off as it pushes up. Are you tracking?
Yeah, I'm tracking. But do you know, obviously you said how it could either rally back up or come back down, but we trade order blocks and imbalances, which would give us more confidence that a price is going to come down to an order block.
Right, but
Because
you do have an imbalance here that is not filled. You know that, right?
Yeah, I know.
Yeah.
So obviously
I
it's a possibility that
I
price
don't
could come back down there, but with
very,
this,
very much
yeah,
so. It can come down and fill this imbalance. The price action tells me that it probably won't, but who knows? Like I can't guarantee you that as a trader. And that's why if it were me and I was using a stop loss, my stop loss would be past that imbalance. It would be a 60 pip stop loss.
And then you'll have your hedge.
Well, I hedge anyway. My hedge is going to be at 40 pips. It's going to be right down here at that imbalance. That's where my hedge would pick up. But really, I think this candle will tell us everything we need to know. There's 2 hours and 12 minutes. If this candle closes at or above this high, I don't think we'll worry about that imbalance. If it does not, then I definitely think this imbalance is in play. Okay, so now that we got all that information out of the way, and this is where it's important as a trader to understand what we're working with. Like, as a trader, you should know that there's an imbalance here. You have to know that this is an imbalance, because your price can come in and tap this imbalance. You have to understand that this is an order block. It's a version order block. It's not been tapped. If you trade supply and demand, you know that this is a zone. It could tap the zone and go higher, right? You have to understand all these things as a trader. You still have to see the structure is up. So you know that this pair is going to continue going up. If it comes down here, it's just coming down here temporarily. Saying that, with all that said, if you find this pair and the price is way down here, this is where you want to get you another entry, right? If the price comes way down here, you're not going to beat an entry down here, because you're going to make all your money back by the time price reaches where it is right now. You will have made any money that you lost. You would have made it back, and then some, probably. That's over 100 pip move. If it comes down here and taps this order block and comes back up, that's 133 pips. So you have to understand where you have the advantage of the trader. Just because price pushes down should not discourage you from hopping in on a good position, because you know it's coming back.
Okay, so if you're looking like deeper into price action, like on the 4 hour where it's got the doji bearish candle and the bullish candle.
Where's the doji bearish?
Left. Well,
over here somewhere?
No, just where you are. Yeah.
This, okay.
Yeah, so it's got those relatively equal lows.
Right.
So that should be liquidity obviously resting beneath there.
Right. And your imbalance is right there.
Yeah. So, and obviously you've got news at 2 p.m.
Right.
Which don't know if it's going to be good or bad, because it's their track record has been very
well. We can assume that it's going to be
wick, but price could wick into that area.
You have to look at the chart. You can't just say we do have news, but what is the chart set up for?
Yeah, I know, but what you just said, obviously it could come down to that imbalance, and
that's your news wick, right?
Yeah, that could be a news wick. That's what I was saying.
And then we're going higher. So yeah, that's how I would play it. So if you're going to trade, or if you're going to wait for an entry, you could put an entry right there at that imbalance, and when that news wick comes there, it can wick you right in the trade and take you up here 133 pips. Obviously, if this pair goes, if this order block closes and it makes the bullish order block, then this is probably out of play, and this would be your liquidity for the news.
Got you. So when that bullish candle goes up, then you just wait for another retreat, like pullback on the 4 hour for a bearish candle.
I think the price would just meander at that point, because it's not going to get too far away from whatever liquidity that it's going to tap in when that report comes out. You know what I'm saying?
Can you just repeat that again, please?
I said price is probably going to start meandering. It's going to hang out in the area. The closer you get to that news event, the momentum of these candles are going to chill out. Like price is just going to hang out. So maybe it just moves sideways through here. If it moves sideways and it never breaks the top and it just moves, then it would lead me to believe that news wick is going to push price down, right? It's going to wick out right around here, close that imbalance, and then it'll push up after that.
Okay, so you would wait for London session?
Well, definitely. If you're not in the trade right now, you have to either wait for London or you have to account for your entry. So if you enter on a bullish order block here, your hedge or your stop loss would be beneath this bullish order block, right? Yeah. So you're always going to account for where you enter. And if you want to take profit before that news comes out, then that's cool too. But just understand that it's going to wick one direction and move in the opposite direction. That's the type of move you're looking for. Most of the time, whenever I look for those moves, I drop to the 15-minute time frame though.
What, for the news moves?
Yeah.
Sorry, the news moves.
Because if you drop to the 15-minute, this is that area. So it will be hanging out. You get a wick. It will wick down here. It will wick these lows. Then it will go up. You can actually see the area that needs to break. Or it'll wick up here, wick these highs, and then it'll push down.
Yeah, it's very visible on the 15-minute.
Right.
Like, obviously more detail. But then on the 50-minute, would you still account for the moving average, or would you just take it on the 4 hour? Would you go to the 4 hour?
I would definitely just worry about the 4 hour. The 15-minute is just if I'm trading that news and looking for where I think the news is going to wick, I'm using the 15-minute. Most of us aren't on that level yet. So, I don't even mention that type of stuff. All we need to do in here to make money is to trade these order blocks, right? And protect our trade at the order block, which means if you get a bullish order block, your stop loss or your hedge goes right beneath that order block. If price comes back and pushes, you're not going to lose your account. Your hedge is going to pick up, or you're going to get stopped out of the trade. And then once that news is over, once whatever event happens, it's going to turn and go back up. You can always get you another entry on that 4 hour time frame. Most of us who traded this yesterday, we're in the blue. We've made however much percent. So really, there's no incentive for us to trade before that news. But if you are going to trade before that news, just use a hedge, because the news is not going to hurt you. The pair it might push back, but it's going to go the direction that it's going to go up. So, if you're in the trade or you're in profit, just hang out there, and protect your profit from that news.
Hello?
Yeah, I'm here.
So how would, figuratively speaking, if someone is in the trades now and they need to protect their profit from the news, would you just say put in a hedge?
I would say if you're in the trade,
just take your profit.
If somebody was in the trade right now, just take your profit. Just
and
take
then
the,
just get in a better entry.
yeah. I mean, you can get in tomorrow, or you can wake up. If you most people, is anybody in the trade in profit right now? That plans on holding this trade tonight? No one. So, yeah, because if you were in the trade, then you would just take your profit, right? You can wake up in the morning and look for a 4-hour order block and take the trade. It's still going to be going up. It's going to go whatever direction that news, pushes it or whatever. It's going to go. You don't have to trade the actual news event. But if you are in the trade and you don't want to get out of it, you just throw your hedge in, at the order block below where you got in. Or you throw your hedge in wherever you want to keep the profit that you want to keep. You know what I'm saying? If you want to make sure, okay, I want to protect this $150 that I'm up, you put your hedge in. So if it comes back, if it pushes you back, you're still going to be up $150.
Or you could just take partials as well.
You can, but you still want to protect whatever you leave in there, right? You don't want to take partials and then take a loss on the trade that you have left. You want to take partials and still protect, hedge, or stop loss, whatever you have in there,
Yeah, so say this trade that you've got marked up now, are you still in this trade? Or have you taken, you said you've taken.
I made my,
does that mean you've
made
taken
over 10%? Yeah, I closed mine out. I'm good.
Okay, so you're not in this trade anymore.
No.
But you could have taken partials and left
Well, I could have, but for the account that I'm qualifying for my brother, I'm, why would I risk anything,
Mm-hmm. No, I thought it was your personal account or something.
Well, when I make my 10% on them, it's a wrap. What I'm going to do, I'm going to trade an accelerated account. So if this closes bullish, I'm going to enter a position in here on my accelerated account.
Okay. So this method you would do for like every pair, like this is the same method.
Yeah, this is exactly how I trade every week. This is exactly how I do it. Now I'm more fluid, as far as dropping down time frames, but this is exactly how I trade. It's there is no need for me to take on any more risks than you guys, there's no need for it. And there's a lot of times where I think a trade is going to do something and it does exactly the opposite. A lot. That happens a lot.
Well, on the 4-hour?
On the weekly, if you look at the weekly, right? This is a bearish order block. Mm-hmm. So what most people would say, or what I would have normally said, okay, it's going to go up here and it's going to sell. But what's going to happen is going to go up here and they'll keep buying. That'll be the exact opposite of what I thought would happen. Mm-hmm. But because I'm true to these order blocks, I don't get fooled. It doesn't matter that I think that something is going to happen. What matters is I think it's going to happen, but I have to wait for these order blocks to set up. And what happens is it just never sets up for a sale. It just keeps buying. So I just keep in the trade, right?
Okay, yeah. So that's part of your rules. Like
it should be part of everybody's rule. You can't sell something that's buying.
I'm just saying for your rules for this strategy, that is part of your rules.
Of course. Yeah. It doesn't matter what you think. It's okay to, all of us have a thought process. We think something about a trade setup, then it doesn't happen. So we have to trade what we see, not what we thought was going to happen. That's very important.
Yes, that's what I said to you earlier about I'm anticipating the moves way too much and then sticking with that bias.
Right. Yeah, you gotta abandon your what you think is going to happen once the chart shows you something different.
Mm-hmm. Yeah, I need to work on that. So, what are your rules then?
As far as what?
Or trading. You
Well,
know what I mean? Because
I
obviously,
find my setup.
if you don't see it on the 4 hour, like
No,
if you just said
so
that if
listen,
on weekly you
I,
anticipated to go up into the
this is
periodic
this
order
is
block, but if
exactly
you don't
how
see
I
it on the
trade
4 hour,
every
you
week.
don't.
Every week, I look for weekly order blocks, right?
Mm-hmm.
I find my setups on the weekly charts. I enter in my trade at least 2 time frames below. Most of the time, I enter less on a shorter time frame than the 4 hour, right? But
which time frames can you be
well,
specific?
no, I don't. I want you to do it on the 4 hour because that's you got it. You have to get good at the way it works before you start doing the extra stuff. So you enter on the 4 hour. Use your 2 time frames down to enter your trade. If you do this, you will not lose. Like this is what's going to make you successful. Once you're successful doing it this way, you can add your own little flavor onto it. But if you try to add your flavor onto it before you're successful, it's going to cause issues. And that's what was going on with Selena. But you find your setup on the weekly. You use your entry, use your 4 hour time frame for entry. And then you trade that 4 hour time frame. You're true to whatever these order blocks say on the 4 hour time frame. Bullish order block, you stay bullish. What you can do is when you have these pullbacks, right? You need to be looking for an additional entry, right? When you look for an additional entry, you're on this 4 hour time frame. You got to drop down to the 15-minute because that's 2 time frames down for the 4 hour, and that's where you can get your new entry. For instance, this is a bullish order block. If you would drop down to the 2 hour time frame, I mean the 15-minute time frame, you would have found the bullish order block on one of these two next 2 candles would have gave you a bullish order block on the 15-minute time frame. Now you're in there, you would have made a crap ton of profit right here because this 15-minute order block would have probably been about 10 pips. And your lot size would have been a lot bigger. So this candle, you would have made more on this one candle than you did probably throughout this first part of this trade. Does that make sense?
Yes, because you would have got the full candle.
Right. So that's it. You know, when do I get out of the trade? Whenever I make my 10%, it's a wrap. I don't care if there's 50% to be made because the problem comes into play. If you don't take your 10%, then what the hell are you going to take? Who makes 10% every week? You have to set a hard stop, right? A lot of these trades that we pick are going to run all week. You can't stay in the trade and get every pip. You're never going to get every pip. So you have to set you a hard stop. And guess what? A lot of times it's going to mean that you got to stop trading Monday. And then you got to wait 4 freaking days and look at everybody else post their profits and talk about their setups. Get in a demo and trade the rest of the week. Protect the money that you make. Over time, that money is just going to stack up. So trade the 4 hour, take your profits at whatever percentage that you lay out. Maybe you're not chasing 10% initially. Maybe you're chasing 5%. You're chasing 4%. You know, if you look at this trade setup, this is an 11% trade, guys. From start to finish, this is a 11% trade. Now, mind you, I'm done. I've made my 10%, but somebody might just have one position and ride this all the way up. And it might be Tuesday night, Wednesday night, where it hits TP. And when you look at this, you're like, dang, I just made 11.8% on one freaking trade. This right here is how I've been able to grow so much as a trader. And once you figure out, okay, all I got to do is add a position. If I get in this trade with 2 positions, I'm going to make 22 freaking percent this week, as long as this thing hits TP, right? Maybe you don't need 22%. Maybe you're going to enter 2 positions and you just wanted 252 pips, 14%. If you had 2 positions and entered this trade yesterday, of course, it didn't go down here. So let's move it to where it did enter, right? So let's just say this is where you had your trade set up. Boom, the market opened. You took two positions and you paid that expensive ass entry fee because you paid that high spread.
Good.
But you're up 15% right now. You made 15% already on your account. What's today? Monday? Come on, man. You can't beat that, man. You can't beat it. Show me somewhere else where you're making that type of profit. This is every week. If you're disciplined enough to do it just like this, you're going to make more money than you can spend. And the way you do it, you can start with a $5,000 account by My Forex Funds. Trade 4 weeks just like this. Get your first payout. Get your little $49 back. You can buy you a $50,000 account. Trade just like this for 4 weeks. Get your little $300 back. You can get you a $200,000 account. Trade just like this for 4 weeks. Now you make 15% on a $200,000 account. That's over 20K. And if you're making that every freaking week, geez, you're making 80K a month. That's at 10%. This trade setup is 15. So all I'm trying to do is paint you a picture of how you can be super rich in 2 years. You can be super rich in 2 years. I've made so much money this year. It's ridiculous.
Do you mean like consistently profitable?
I mean 10% every week on the low side. Man, do you understand that some weeks I made 50 grand? 1 week I made $46,000 in the trade.
Yeah, you showed me.
Yeah, this is just me, old country dude, trading this strategy right here. It's not me because I got a Harvard education. I got my degree from DeVry. I don't have this knack for trading or any superior skill set. I was in the Army for 20 freaking years. So what I'm telling you is, if you just take the same thing that we've seen this week, and if you look at it, it's just a matter of how we arrange our thoughts. Like all of us have been looking at this trade. Now, if you look down here, most of us would not have noticed that we made 7.8%, right? And then most of us won't think past that 7.8%, where we could risk 1% and make 7.8. That means if you have 2 trades, you're risking 2% of your account and you're making 15 freaking percent. You're done. 1 day of trading, you're done. People would not believe that you're actually doing this, but this is not rocket science. All we did was look at the trade setups that we had coming for the week. We understood how price needed to move, and we took advantage of it. If you do that every week, and that's all I try to do every weekend, and I try to point out a pair that's going to move our direction. Most of the time, there's 2 pairs that I favor, and I get in those trades. Once I'm in that trade and it's going my direction, I'm going to make my 10% guaranteed, and I'm getting the hell out the trade. I don't care what you make. Like, you could be in the trade all week and you could be hooping and hollering. Y'all can be with Will and making $8,000 a day. I don't give a darn. As long as I get my 10, I'm good. And I'm chilling into the next week. You know what I'm saying? So if you can adopt that mindset, you're going to make more money than you can spend from now on, because you can't stop. You can't unsee what I just showed you.
Yeah. So you're making like a salary in a day.
Yes, man. Do you know I have a 50K account? I have a 20K account. Do you know what 10% a week on that 50K account is? Yeah, that's 20K a month. And that's just if I stop. I have to hit 10% on the head, right? Most of the time is over 10%, because just like this is a 15% trade. It's hard to stop at just 10%. So I'll wake up, okay, I've made my percentage, but maybe I made 13%. Maybe I made 15, maybe I made 18, maybe I made 36%, maybe I made $40,000. But my point is, if you aim for your percentage based on your setup, you're going to get paid. Get out the trade. You know, don't be euphoric and jump into another trade. Wait until the next week. We see clearly on the weekends. We see the setup happen on the weekend. Then we can trade it and get our money. And we wait till the next weekend. Trade it, get our money. Wait till the next weekend. That's it. You know, I think what benefits me is, you know, I'm 50. I don't have to go to the club or buy new clothes or that other bull crap. You know, I don't do crap. So I don't need to go and splurge and spend money or not, you know, I don't have to make more than what I make. I can just take my profit and keep it moving. I don't think so highly of myself that I'm the best trader out there. No, I'll keep getting lucky every week and you know, and keep pocketing that 10%. You know, what I am going to do though is I'm going to qualify a bigger account. You know, I talked to old Prince Pips today, you know, but I'm going to qualify a bigger account. And I'm going to make 10% off a 200K account or 100K account or whatever, you know, and I'll just run it up from there. But the goal is to get everybody in here to be able to see the trade setup. You know, if you just put one position in, put one position in and collect your 7 or 8%.
Gotcha. So just to recap, so it's clear. I don't know if anybody else needs like a clear recap, but I just want to recap the technicals after that rant, which was really nice. So you start from the weekly analysis. Hello.
Mm-hmm.
So you start from the.
Huh? Yeah, that's correct. I start from the weekly analysis.
Start from the weekly analysis, like on the weekend. Look for pairs with a weekly OB that you can trade the direction of the trend. Is that correct?
That's correct.
Yeah. And then choose a pair with like a high pip count or more movement.
That's correct.
More frequent movement. And then put the fib on. Then put a fib on the order block, the chosen pair. This is for beginners, by the way, Todd. So keep that in mind.
So yeah, you know, you can fib the weekly candle, or if the weekly candle has an order block, like a bullish order block, you know it's going to retrace bearish to tap into that order block before it goes that direction. So you trade it the direction back towards the order block. Once it gets there and taps in, you can trade it in the opposite direction, right?
Yeah, for the following week, or if you know.
But sometimes it happens
might happen in the same week.
Yeah, it'll happen like the first 2 days it'll go one direction, and the next 3 it'll go the opposite direction.
That's what I said on the like for the weekly analysis. You also need to know like the knowledge of the news for that pair as well, just in case you might get.
Well, obviously you look at the news, but you take all your commands will come right here on this 4 hour. If it's going bullish, it's going to show you on the 4 hour. When it changes,
yeah, I know, but we're just going to go step by step, get fast. So the weekly analysis, then I have knowledge of the news. Look for pairs with a weekly order block that we can trade in the trend direction, and then choose a pair with a high pip count that has like more frequent movement in the times that you trade, because obviously some people trade at different times.
Well, I would tell you, I think that you should trade whenever that, you know, me as a trader, if it's going to move on the London session, I'm getting up. If it's going to move in the US session, then I don't have to get up.
Okay, so whenever there's movement, just like set your alerts basically.
Yeah,
so fib the pair on the weekly candle, and then you don't go to the daily time frame. You just go straight to the 4 hour. Is that correct?
2 time frames down, straight to the 4 hour.
Okay, straight to the 4 hour, and then is it you look for setups on the 4 hour on the weekly analysis, or after London, Sunday's open?
Your setups are you find your setups on the day, on the weekly. You find your entry on the 4 hour.
But on the, when you're doing the weekly analysis on the weekend, you go down to the 4 hour as well, or you just, wait.
You don't have to go to the 4 hour. You don't have to go to the 4 hour on the weekly analysis. Whenever I do my weekly analysis, I find the setup on the weekly. As a matter of fact, Selena is the one that goes and finds all the order blocks. We don't have to do this on our, like Selena goes and finds the order blocks.
I know, but I'm just going step by step. You're ranting way too much. Let's just keep it nice, short and sweet.
I think this is step by step. I'm telling you, you don't need to go to the 4 hour when you do your weekly analysis.
Okay, yeah. So so you wait for market to open on like the Sunday or the Monday to see if price is given an order block on the 4 hour for an entry. Is that correct?
Right.
In the direction, supposed direction that that aligns with the weekly order block.
Well, let's talk about that. Well, what if the order block is in the opposite direction? Can you trade it? Yes, you can. Right?
What? So do you mean if, obviously, for, let's take GDP, NZD. So what do you mean? Say if this order block was a bearish order block instead of a bullish order block?
Yes. Then you can trade it.
Okay.
We have
Does that mean your weekly bias is wrong then?
That doesn't mean the weekly bias is wrong. It means that the pair is just going the direction that it's supposed to go. So let me tell you what I mean. When I analyze this weekend, this is a bearish order block. We're trading the retracement of that move. So just because I anticipated that it was going to retrace, it could have opened up and just kept pushing down. It wouldn't have made my analysis wrong, right? It just means that we're not retracing right now. So I need to take that bearish order block and sell it like this candle told me that it was going to sell. So this is exactly what I was talking about when I say sometimes I'm dead wrong when I analyze something. I think it's going to buy, it sells. The 4 hour chart allows you to take advantage of the move no matter what direction you think it's going to go. You just have to be agile as a trader. You have your bias, but you trade the chart. My bias is for it to buy, but if the chart's set up for a sell, I would have to sell it.
Okay, yeah. So if there's like confluence that the sell is going to continue, like either like a bearish order block or some kind of, your what was those lines? Those lines.
Moving average?
Yeah, the moving averages are, directed bearish, then obviously it will give you more confidence to keep on taking the trade for a sell.
Right.
Yeah. Okay. What was I go to? Oh yeah. So trade the 4 hour time frame and stay true to the 4 hour. So don't go like down to the 1 hour or 2 hour.
Don't go down in the weeds. We're not at that level. We're not in the weeds yet.
So only if there's a pullback, go to the 15-minute time frame for entry, for a trade, for the continuation of the trend.
Yeah. Only if you're skilled enough to trade the pullback. You don't even have to trade the pullback, because when you think about it, the pullback is called a counter trend trade. Now you have to be honest with yourself as a trader. Either you're skilled enough to trade that or you're not. And if you're not, that's fine, because there's plenty of pips that are going to happen in the direction of the trend.
Okay, so if you are trading the pullback and say you're at an area where price might pull further back than expected, like say for instance on this GDP NZD, your price is aligning to this bearish order block, and price might pull back further, so you can put in for a hedge for a buy and a sell.
Exactly. That's true. That's correct.
Okay. And then always know your risk to reward on the trade that you're in.
Of course, that's the basics. Always know risk and reward.
Yeah, but sometimes I need to know basics. And then, do you want to finish off?
I think that is. I think that is finishing up. Always. I mean,
just take 10%. Like once you hit your
10%. Yeah. Once you hit your 10%, or I say,
enter. How do you enter the trade? So
whatever your percentage is, you have to get out the trade.
How do you enter? Just on the 4 hour or the one? Do you enter on the 1 hour though as well?
Jesus.
So does that mean you enter? Clarify.
I told you. Listen, you find your setup on the weekly. Your entry is 2 time frames down. If your setup is a bearish order block on the weekly, and you expect the trade to sell, then your entry is a bearish order block on the 4 hour. If the analysis was that this pair is going to buy, then your entry is a bullish order block on that 4 hour. In this case, our analysis was for the buy, for this pair to buy. So the entry was on a bullish order block, right? So this really should have been the first place that most people enter the trade on this bullish order block.
So you never drop down to like 50
well,
minutes.
I do, yeah. I do, but we're not talking about me.
Okay, okay, this is beginners. Okay, cool. Yeah, and then just take your, obviously, know your risk reward and take your 10%. Or whatever percent.
Or if your percent, let's say you're starting off with 6%, or I want to make 5%. 5% a week is excellent. It's 10% every 2 weeks, 20% a month. I mean, you can make a killing like that. So whatever your percentage is, you need to write it in your trading plan. Or, maybe you don't have a percentage. Maybe you want to put 2 positions in the trade, and you'll take whatever percentage that gives you. I don't know the right answer for each individual trader, but each individual trader should have all that.
Say on a challenge account, the basics is it 8% and then 4%.
Yeah, but yeah. I honestly don't think that somebody who's new to trading should worry about passing a challenge account in 1 week, right? Maybe you're just going to take 2 positions in a trade setup. You're going to risk 2% that week. So maybe you say, okay, I'm going to put my whole 2% in this one trade idea. So that means 2 positions. It just so happens this trade idea would have qualified your account, but it wasn't because you were trying to do it. You were just taking the trade setup. You understand what I'm saying?
Yeah, but that means you need to do proper risk management, though.
Well, always proper risk management. Always. There should never be a time where you over risk something. It's just not worth it. There are too many winning trade setups to risk too much on one idea.
Mm-hmm.
I think Selena said before she got off that most weeks there are about 700 pips available to us on the order blocks that we identify. So why would you risk more than what you're supposed to?
Mm.
If you don't pass this week, you're going to pass the next week. That's how it works.
Yeah, live to trade another day.
Yeah.
Okay, I think that's clarified. Oh, that's good. Thank you.
You're welcome.
When you got to upload this, do you guys find this helpful? If you haven't said anything, I've just been talking the whole time. Oh, Britt said very, very helpful. When would you be able to upload this recording, please?
Probably next week because you keep talking. It's probably gonna be next week.
No, please, I need this tonight.
Well, hey, you got to get off the Zoom, but to get it tonight.
Yeah, can you stop recording them, please?
I can stop recording with it.